Hey guys, this is Chris Mincolla with the Mincolla Group over at West USA Realty, and I'm doing our weekly housing market update. I'm actually going to have a couple for you this week and some other information as we go along with the war in Iran. We didn't get one out last week, so I'll be doing a couple this week for you. So, anyways, let's go ahead and share the screen here and make sure we're showing you the right stuff. I am going to be getting into this PPI report that came out. This was interesting. It had a little fluctuation in the stock market. It seasonally adjusted at 0.8% more than the 0.6% gain in December. So it was well ahead of estimates for 0.3%. But when you dig into the numbers, you figure out that what was going on there was a lot of government expenditures that were in that. So I think we're going to see that come down. I don't think that's really going to affect things too much moving forward. And that gets me into the next thing I wanted to talk about, and that is um, I've got this in the way here. Okay. Um, is this vacancy report. So basically, kind of sum this up for you. Rental vacancies rose um, to 7.2%, a key input to shelter inflation that may support lower inflation and steadier mortgage rates. However, vacancy is 1.2%, suggesting limited seller stress even as inventory improves. Okay. So this kind of goes against the whole idea that we're having higher inflation. So since the 40% of the CPI, as it mentions here, inflation is shelter, and so it's a big chunk of that. And we've seen over the past 26 months that this has actually come down. So um, we look at where we were last week on a 10-year treasury, we had come down all the way at 3.9 on the 10-year treasury. And today, uh, mortgage rates fell at the end of the week of last week. Mortgage rates end week at best levels in about 3.5 years. Okay, since we saw rates shoot up over the last few years. So what that basically tells us from last week, we ended up actually at under 6%. Today, it's actually shot up a little bit. Now, with our local lender here, he's got ARM rates at 4.75, conventional FHA at 4.25, and VA at 4.125. That's Andrew Fisher over at Simplify Home Loans. And then if we look at the fixed rates that he has ending last week, and again, we'll update this again going into the week, but conventional was at 5.25, FHA 4.875, and VA at 4.875. So much lower than the national average that we're looking at today, obviously. So that's good news for if you're living in the Phoenix area, make sure you reach out to us. I wanted to point out um, mortgage applications are up over last year, although they've gone down, and a lot of that has to do with a lot of what we're seeing in inventory and pending sales across the country, because a lot of it is taken up with the Northeast and Eastern states that are getting hit with these snowstorms. So we have to kind of take that with a seasonal grain of salt for those areas, since this is countrywide. But mortgage applications are up over last year, as we can see here. This was taken 25th of February at 149,000, and then we have last year at 144,000, even with this dip with the snow that we had. And we saw over here at the end of January that it was way up right before the storms hit at 194,000. So I think we'll see that snap back. Not to worry. We'll definitely see that snap back. So let's talk about the current inventory situation and what's going on here with supply and demand here in the Phoenix area. We have 88 days closed on market right now. That's the average in the greater Phoenix area. 5.17 month supply. Absorption rate is up about 5%. That means properties are being absorbed more and they're selling more than they were just last week at 19.33%. Average list price is 783,000. Average sales price is 628,000. That's up about 3,000 over the past couple of weeks. And the list to sales price ratio is at 97.11%. So sellers are still giving up almost 3% there on whatever they're listing it for and what they're actually selling it for. Active listings are up 1.6%. We've seen that rising this whole year. So that will help not only give buyers more options, but it will also ease some of the price inflation that we were worried about. However, pending sales are catching up with the market, and they are up 8.7% this week over week from 2 weeks ago to last week. Again, these are a little bit behind since I didn't get to this last week. It's been crazy busy, guys. I apologize for not jumping on last week. Closed units at 0.2%. Again, keep in mind, we're going to start seeing this closed units go up as we kind of move through the mortgage applications that are coming out and people going under contract here as we see those numbers kind of give us a good indicator of where we're probably going to be over the next 30 to 60 days on that. So we'll keep an eye on that. If we jump down here to the bottom, we can see all the different price ranges. We can see that all of them are definitely up as far as inventory. We can see the days on market here, except at the 5 million plus range. All these are up in inventory, and 66.72% of the market is made up from 0 to or up to 106, or I'm sorry, up to 600,000. From 600,000 up to a million, we're at 18.65%, and a million plus of the market is made up of 14.61%. So getting back into some of the other numbers here, if we jump into the dashboard here on my rapid stat system, we can see from last year, listing counts are up 3.17% year over year. And the sold count is up 3.3%. And the under contracts are up 9.8%. So basically every marker is up, showing more activity, more buyers in the market, more sellers in the market. People are getting active out there. So you might want to get ahead of some of the competition that we're probably going to see more of coming heading now into March, into April, and into May, which would be the busy season. So if you have any questions on that, please feel free to reach out to us on what your local area looks like. Right now, total active in the greater Phoenix area right now for our MLS is at 25,265. And if we look at the Cromford report on what kind of market we're in right now, we are in a buyer's market. Below 90 on the index is a buyer's market. Above 110 is a seller's market. Right now, our supply is at 102, 100 being totally balanced. If the supply and demand were actually the same number, this would be at a 100 range. Right now, our demand's a little bit lower than we'd like to see it. But I think as we can see in the pending sales, that is going to be on the rise. So we kind of see that we've got more buyers in the market, which is a good thing, and more sellers in the market. So a very active market that we're heading into right now. Something to definitely keep in mind. And again, we can assess your local area, your type of property for what that would look like for you to list your property at this time. When we look at the index here for the contract ratios. This is interesting. Let me just pull this out and just want for Maricopa County. We don't need all this other stuff. Okay. So if we pull in for Maricopa County, we can see that our contract ratio is sitting right now at for what's actually listed for sale and what's actually under contract. It's actually been steadily going up little by little. Nothing crazy, but over 30 puts us in a warm market. This has been steadily going up here. If you can see the bars, last week we were at 36.9, and this week it's kind of held steady from where we were last week. It was up a little bit last week or 2 weeks ago, but that tells us more of right now what's happening. So we're in kind of a warm market. Nothing crazy, nothing getting out of control. We can see all the way, if we look back here where we were just the last few years and where we were back going all the way back to 2023, the difference in the market right now. So it's really kind of a depending on your area is going to matter a lot. So let's take a look at the map here and see what this is telling us. If we look at, whoops, that just went nuts on me. Let's see here. Okay, if we look at this, we could see Phoenix 85024 is definitely in a hot area. If we look at 85 in Phoenix 85028, that's in a hot area. Tempe 85284 is in a hot area. Chandler is in a hotter area right now, very hot, 85226. Gilbert was hot. Now it's kind of more in a balanced warm. Okay, over here, we can see Phoenix 85045 right now is a very hot area. And then if we look over at the contract ratio in Tolleson at 85353, that's putting us in a very hot area. So just wanted to make sure I updated you guys really quick on what was going on in the market, especially since we didn't get to this past week. I'll do a more complete report for you going into the week here as things go along. One of the big things that obviously is on everybody's mind is what could the war mean? It could go either way, but most likely with the war, it's probably favoring the side of eventually after the markets do their normal volatile reaction to some of that PPI data. And now with the war, we may see that actually come down over the next few days. So we'll keep an eye on it, see what's going on there with it. But if you guys have any questions at all, feel free to reach out. We'd love to be able to help you at all with any of your home selling or home buying needs. Feel free to reach out. Those rates are absolutely incredible that Andrew has. So definitely a good way to get back into the market if you're thinking about buying. And even if you're thinking about selling, it also helps us kind of make it a little bit more affordable for the buyers, maybe looking at your property, which of course we can always point out to them. So feel free to reach out anytime with any questions, and we'll see you next time.